So the next area of the SQE syllabus you need to know is income tax. And we're going to start with who is chargeable. So the business law course has introduced you to employees, sole traders, partners, directors, shareholders, for example. And all these parties are required to pay different types of tax to the government. And the first type of tax is income tax. So the amount of tax that has to be paid is calculated in accordance with a tax year, and that period begins on the 6th of April in one year and lasts until the 5th of April in the next year. Income tax is paid on money that is earned on a regular basis. So money that's earned on a regular basis is typically known as income. Income tax is payable by individuals. Companies do not pay income tax, they pay corporation tax instead, which we'll come to in due course. For example, Peter is an employee at ABC Limited. He receives a salary of £10,000 per month. Therefore, Peter has to pay income tax on this regular payment of his wages. Now, sole traders are also required to pay income tax. This will be calculated using the so-called self-assessment method, which we'll come on to discuss. A sole trader is taxed on the self-employed income that he receives, which comes from the business's profits. Shareholders in ABC Limited are paid dividends on an annual basis. They will have to pay income tax on their dividend payments. Partners in a partnership have to pay income tax on their share of the partnership profits that they receive. If the partners are individual human beings as opposed to companies, they may have to pay tax on the partnership's trading profits and capital gains tax on the partnership's capital gains. Now, where a lender is an individual and loans money to another person, the Income Tax, Trading and Other Income Act of 2005 requires the lender to pay income tax on the money that they're paid in interest. Now, the other important point is debenture holders. So a debenture holder, like someone who holds a government bond, is paid a fixed form of interest, which constitutes a form of income from the debenture. Accordingly, a debenture holder also has to pay income tax on this interest. So what's a sample question of the kinds you could get in the SQE exam on income tax and this particular subtopic? Let's consider an example. Which of the following is not liable to pay income tax? An employee, a sole trader, a partner in a partnership, someone who only earns money in certain months, a company. The correct answer is E, a company. So a company is not liable to pay income tax, it pays corporation tax instead.